Yesterday, OPEC unexpectedly decided to raise output, which did not come in line with analysts' expectations. Production volumes will be gradually increased by 350,000 barrels per day in May, by another 350,000 in June, and by 440,000 in July. Such a move by the alliance has surprised the markets, as experts were sure that OPEC would keep production cuts unchanged. Besides, the cartel itself downgraded its forecast for oil demand and reduced the outlook to 5.6 million barrels per day from 5.9 million that was previously expected. So, why did oil prices surge yesterday despite new market conditions? Experts name several reasons that supported the commodity. First of all, oil is rising amid a recovery of the U.S. economy and a strong U.S. stock market. Yesterday, major U.S. stock indices rose in the range of 0.5 to 1.7%. Secondly, the recently adopted relief package of $1.9 trillion and another stimulus program of $2.2 trillion announced by Joe Biden yesterday is a big liquidity boost for the economy and the markets. The latest spending plan is intended for 8 years. Finally, the U.S. Federal Reserve and other global central banks continue to pump money into the economy. Apparently, all these factors outweighed the decision by OPEC to make a slight increase in the oil production. At the end of the trading session on Thursday, both oil benchmarks gained 3%. Brent was trading at $64.65 per barrel. WTI settled at $61.20 per barrel. According to the new plan by OPEC, Russia will increase its crude output by 114,000 barrels per day until July. However, the Russian market and the ruble in particular reacted with a strong decline. The MOEX Russia index dropped by 0.1%. The IRTS index was down by 1.4%. The ruble depreciated by 70 kopecks against the US dollar, while against the euro, the Russian currency fell by 1%. The reason for this is the escalation of tensions in Donbass that may possibly bring new sanctions against Russia. Yesterday, after the fire between DPR, LPR and Ukraine had intensified, the U.S. Department of Defense made a statement about a build-up of Russian troops near the border with Ukraine. The dollar versus ruble pair was trading at 76.15. Today, the ruble is expected to strengthen amid higher oil prices and move to the range of 75.50 to 76.50 per dollar. Yesterday, the euro stopped its long decline against the greenback and is likely to continue an uptrend. In the euro-ruble pair, the Russian currency is depreciating for the same reasons as we mentioned above. On Friday, the ruble was trading at 89.70 against the euro. The pair is expected to hold in the channel between 89 and 90.50 rubles per euro. Markets are looking ahead to the key jobs report from the US. The employment data for March will be published today, despite closing of exchanges ahead of the Easter holidays. Analysts expect to see positive data that will show acceleration in the employment rate and a lower number of unemployed. Meanwhile, the fears over a new pandemic wave have intensified in Europe. Find more information in our evening review of the US market. That's all for now. Thank you for watching and stay tuned.